18th of July 2022. I just wanted to talk about a specific issue that I'm seeing, and that is relative strength, the pros of it, and also sometimes the pitfalls of it as well. Discussed last week, I've put this, this is just a tiny trade while I sort of find my feet again in Lee Auto. Admittedly, I have pinched this from a few other places that I've seen, so it's, yeah, not my own original idea, but a very big, powerful move here, sort of forming this high tight flag. So, because after it's sort of doubled, which is one of the conditions, tag the 20-day nice upside reversal. So I bought it here. Maybe it needs to consolidate more, let the 50 catch up. We'll see. I've got my stop just under here, so we'll see how it goes. But I'm not. Yeah, the purpose of today's video is not to talk about this trade as such. It's to talk about relative strength. So, okay. So on sort of individually here. So yeah, the relative strength is 98, really strong. That looks really good. But what we're also looking for is a sector that's strong. So if we click here on, so it's part of the auto manufacturers thing sector here, you can see it's 187 out of 197 groups. This chart of the sector doesn't look particularly good at all. And this is more or less Tesla. Because if we have a look at the stocks in the group, Tesla is by far, Tesla's sort of 3 times the size of Toyota, and Toyota's many times the size of the rest of the sector. So you're basically looking at more or less the Tesla chart here. So this sector, the relative strength isn't very good. It's only on 7, so it's showing that this sector hasn't performed very well compared to sort of many other sectors. So the question is, do I want to be buying a stock that does look strong, but in an otherwise weak sector? I don't even have a firm answer for that, and I sort of just want to sort of talk this out loudly on today's video. So if we compare it to some of the other stocks in the group, you've got RIVN. That looks okay. 50s flatlining, still quite a lot of overhead resistance here. I'd also make the comment that a market cap of $28 billion is very big for a company that hasn't really sort of produced much yet, although I do like the Utes, I must say. Same with Lucid as well, $32 billion market cap. Went through this sort of a frenzy here of EVs. Yes, does look like having a think about going to stage 2, but far from proving itself that it's actually in a stage 2. And like I say, with the market cap already extremely high and a lot of hot air come out back here, I think just to be a little bit sort of cagey about whether they have any sort of sustained move from here. Going back to Lee, the other argument is, well, that I've been thinking is it? Yes, it's an auto manufacturer, so it needs to be in this sector, but is it more of a China play? So let's look at KWEB. KWEB sort of, again, was looking pretty strong, but has been fizzling here. I sort of talked about that in one or two last videos. So maybe having a consolidation before it moves out here, but you'd have to say, let's look at the weekly. Hasn't really proven that this is going to get going yet. Pretty decent pullback. We're going to find out, I think, soon enough. Does it just prove that this does show this is a pullback and away it goes, or it just sort of roll over from here and flop again? We'll see. So yeah, going back to Lee, I don't know what the right answer is there. Should I be bothering with this? Because the overall sector's not that great. So I went back through, and this is very much a Stan Weinstein stuff. You want to look for everything, sort of the wins at your back. So not just an individual stock, but a sector that's performing as well as well, because that's going to increase your chances of finding a winner. I went through, just did a quick study on a few other areas over the weekend. An interesting one that came up was PTON. Just look at the weekly. It was this huge mover coming, pandemic low here, stay at home, work at home, fitness at home, this was just right place, right time, and just what a wonder story it was. Interesting with that though, that if you were to insist that Peloton was part of a strong sector, which is say classified as the leisure services, the sector was sort of had what we're looking for is the S&P 500 selling off here, and where's the strong sector now? That wasn't leisure services at that point. Leisure services was sinking down, and obviously that made sense because you had sort of more normal business, like say Marriott, for example, in there as well, before finally got going. But thinking about that, I think that's where it's got to be a little bit common sense sometimes as well. So Peloton wasn't thought of as a leisure/services sector stock. It was thought of more as a technology, internet type, not necessarily internet, but you know what I mean. That's sort of play. It was grouped in with those work from home. So work from home was almost a sector in itself, even though it's not a formal sector within the US stock groups. So I think sometimes we're going to have to say be happy to put the sector to one side because a stock is thought about in a certain way by the market, at least at that point in time. So that's one example where I think you do need to put it to one side. I'm not saying that's necessarily the case with Lee because, again, this is a very sort of Peloton was in a very unique sort of period in the market. If we looked at, let's look at a few other sectors while we're here. 2, 3, 5, 9 is retail. This is sort of going off a bit of a tangent, but sector sold off here. Sorry, S&P sold off here. This sector was just booming, so huge relative strength. So it was increasing strongly through here, and then exploded higher. But notice and this is where I was trading a lot of these sort of stocks, is as they were sort of trying to grind higher, or even just sideways, the relative strength was dropping off, and I was sort of in here. I wasn't looking for those new sectors that had strong relative strength. So big boo-boo on my behalf, and I've talked about that in my review. One more. G1319 coal. Again, S&P rolling over badly during the pandemic. Coal was also bad, so you just didn't want to touch it. And it was up until about sort of, here, after it sort of based, pushed out, then consolidated, and the relative strength started getting going. So to me, that's showing that I didn't necessarily want a huge relative strength in an absolute sense, but an improving relative strength. So because an improving relative strength means this sector is improving relative to other sectors in the market, and things like Peabody were just cracking buys around here. So I haven't got a conclusion about Lee Auto. I think I'm just going to keep this position very small. I've got to do some more digging on it about does it need to fit in with a sector or some sort of green theme, some sort of hot topic of the day. I can kind of see it with some Chinese EV stocks because there is a big mandate in China to move to EV. But then again, if I look at XPEV, even on the daily here, you can see it's just flailing around. So that was the weekly. On the daily, again, nothing to write home about there. So I'm going to leave this video here. It's a bit of an open-ended question that I need to sort of think through a bit more, and come back and address this in future videos.